Hey guys, welcome back. I hope you're having a really great weekend. So this weekend I am doing a recap of last week's price action first. It's going to be in its own separate video. And then tomorrow, which is Sunday, I will do another video and that's going to have the trading ranges for Monday. So this is just a quick recap, and last week we did have Jerome Powell speaking in Jackson Hole, and that was the highlight of the week, and the markets traded between Monday and Thursday pretty flat across the board. So I'm going to start with SPY right here. We opened the week right here, and then we closed Thursday right here. So you could see the price action. We did see a little bit of upside into this island top that was just off of all-time highs, and then we got pushed back down. So from Monday to Thursday, flat before Jackson Hole. So then on Friday we did open with a gap up. You could see that the 35 EMA starting the week was a support, and then on Thursday we dropped underneath it. Then Friday we gapped back above the 35 EMA, and then we got back up to just underneath this island top resistance. So you can see that was our island top that we made right off of all-time highs in July. So we had an up gap right here, push to make those highs, and then that down gap. So the only part of that gap that we had left going into Friday was the bear gap. The bull gap was closed out the day before getting smacked down. And then we came right up to the bottom of that gap, got pushed away, didn't make any progress into that gap, bounced on the 35 EMA right here, and then we closed just underneath that level. So flirting with all-time highs on Friday, but did get pushed away at this gap. And SPY did close up 1.06%. VIX came down almost 10%, down 9.64%, and we did close outside of the implied move, but just barely. I had the implied move at 562. We closed at 562.13. So if you did sell spreads at 562, 563, those would have closed maybe 75%. And then SPX, we saw the same thing over here, that gap up on Friday, and then we pushed right to the bottom of that down gap, protecting all-time highs. We got pushed back down to the 35 EMA, bounced, and then closed right underneath that gap. And we did close at 56.3460, so just underneath the next day's strike. So if you did sell spreads up here, those would have been blown out. These would have been 100%, and if you took the safer route, 56.75. There wasn't a whole lot of premium there, but I have been mentioning to find a midpoint between the implied move and the top of the 30-day average volatility. That is actually what I did, and I did post that trade out on StockTwits. That did pay 100%. So SPX up 1.15%, VIX again down almost 10%, and we did not close within the implied move here. And QQQ, we saw the same thing Monday through Friday, completely flat. We opened the week right here, we closed Thursday right here, so completely flat, and then we did gap up back above the 35 EMA, dropped underneath it, and got back above slightly to close the week. So in QQQ on Friday, we didn't quite make it to the high of the week, which was on Thursday, and that was also this resistance right here at 484. And QQQ did actually close within the implied move. We opened Friday up here at the top, and then we closed right here. So if you sold spreads at 482 or 484, or even at that midpoint strike, if you did get into something when we got up here at open, those all would have paid. So the market did react positively to Powell. However, we didn't get above some key resistances at the end of the week. And then IWM had the strongest reaction to Powell saying that we will likely be cutting rates in September, and that is because small caps have the most benefit from rates being lowered. And right here from Monday to Thursday, we were pretty flat. We did chop around sideways until that. And then Friday, we gapped up. We got above the 1 hour 200 moving average, which was a previous resistance. You could see right here, we were having trouble around the 1 hour 200 moving average. And then right here again. So gapping up over that 1 hour 200 moving average was a big deal on that time frame. And then we pushed up outside of the top of the implied move for both days, and we took it all the way to the top of the 30-day average volatility. So huge move in IWM, definitely the biggest mover of the week and on the day. And IWM closed up 3.19%. RVX came down 5.12%. And the top of that 30-day average volatility was 221, and we did close 220.38. So we did close within that. And I usually round up, that's how you get 221, but it looks like we literally closed almost perfectly at the top. I have the top of the implied move is 220.35, and then I just rounded that up. So we were within 3 cents of the actual 30-day average volatility. So massive move. And then DIA, we did have the same Monday through Friday here where we opened right here and closed here on Thursday, right before Jerome Powell. Then we gapped up above the 35 EMA. We took it all the way to the top of the implied move for the day. Then we dropped back down, 35 EMA caught us. We got all the way back up to 412, and 411.83 is where we closed. I had the top of the implied move at 412. If you sold 412 and 413 spreads, those would have closed 100% for you. So really fun day on Friday. Lots of awesome spread setups that paid really well. And let me know in the comments how many of you guys are spread traders. I only trade spreads. Okay, not only, but 95% of the trades I take are spreads on the day. So these setups work really well, but let me know how you guys play it. Do you guys buy premium at these strikes that I put out, or what do you do? I am definitely interested in knowing how you guys use these charts. So I'm gonna go ahead and end this video here, because I'm not going to be doing the trading ranges for Monday until tomorrow night. So enjoy the rest of your weekend, and I will see you guys tomorrow night.